We got a bullish Tesla rumor and Rivian stock is up 59%. What's going on? Let's go through everything. The bullish rumor suggests that Tesla is hopeful of 20,000 deliveries in the last week of this month. And that increases delivery expectations from 425,000 to as high as 440,000. And there is more merit to this rumor. Tesla China is rehiring some sales staff amid Q2 delivery push. The sentiment within Tesla China has reportedly been quite good lately, particularly since Tom Zhu has returned to China. He has actually been personally visiting the stores, and that has definitely boosted the morale among the workers. If Tesla delivers 20,000 vehicles this week, that will be the highest week in the last 5 quarters. If you include this quarter as well, we haven't even touched 20,000 recently, and that would certainly exceed expectations. And you will want to click the like button right now because the stock this morning is up. And we got more good news. After Omar threatened to go on a hunger strike, Elon replied with an explanation about what's going on with FSD. 12.4.2 is much smoother. Challenge is keeping safety high while increasing ride comfort. Build moves to internal testing tomorrow. So hopefully Omar's hunger strike won't be too long. Hopefully it's in customers' hands over the weekend if all looks good. To which Elon replied with, yeah, we just need to confirm there are no safety regressions. I am so looking forward to no nag. I'm pretty happy today. Just like Rivian investors who saw Rivian stock go up as high as 59% after this deal has been announced. It has now come down a little bit, but it's still over 35% in a 24-hour period. That's crazy. We have to find out what's going on here. Volkswagen is taking a $1 billion stake in Rivian and will invest another $4 billion to form a joint venture. The company said they will develop next-generation battery-powered vehicles with leading-edge software. They want to beat Tesla at software. Okay, let's not forget that Volkswagen lost billions of dollars trying to make software. But this time they are going to spend more money than the last time, so it is going to work, right? When you lose money, just spend more money. Anyway, Steven says, this is a 200 IQ move by Volkswagen which shows Rivian getting desperate. I wish Rivian well, but I think I remember some guy with 3 first names said that the steps to bankruptcy are number 1, desperation, number 2, mergers, acquisitions, partnerships, and number 3, going bankrupt. Volkswagen is the big winner here. Rivian had no choice. They need money. Interestingly, Volkswagen stock is down. I think it's important to dive into this a bit deeper because this is very relevant to us Tesla stock investors, as deals like this will probably happen more and more often going forward, as a lot of these startups are going to run out of money, making it harder and harder to compete against Tesla. Sawyer says, I think this is a good move for both Rivian and Volkswagen. It helps Rivian survive and it helps Volkswagen with software. And their software in their EVs has been terrible. And that's despite spending billions of dollars on it. Rivian CEO is looking really happy, but Volkswagen CEO is looking like, what did I get myself into again? He's smiling, but I somehow feel like he's feeling a lot of pain. I don't know, he just looks a bit awkward to me. Maybe that's just a German thing. Maybe this actually explains the awkwardness I felt from the Volkswagen CEO. I like to point out the big caveat in the Volkswagen Rivian announcement, in case the joint venture would be established successfully. So this doesn't guarantee yet that Volkswagen will invest $5 billion into Rivian. Also, the track record of such JVs in the auto industry is rather poor. Hence, there is significant risk that this Volkswagen/Rivian JV never materializes. It will be interesting to see the SEC filing with all of the little details about the deal. Oh, and actually there are some dirty details already that we can find from this 8K SEC filing. Gally thinks that Volkswagen is getting a sweetheart deal because Rivian is desperate. So Volkswagen gets to buy Rivian shares at $10.83 per share. That means almost 100 million shares for $1 billion or a 10% dilution. And on top of that, they get 4.75% interest. Wow. So Volkswagen already very roughly made 40% on their investment. And they're getting interest on top of that. Oh, it actually turns out to be a bit more complex than that. Looks like 50% of the $1 billion plus 50% of accrued interest will convert at $10.84 per share. But then the over half of the debt and interest will convert at the 45-day average trading price when the conversion happens, so likely higher than $10.84 per share, meaning overall deal will result in about a dilution equal to 7%, but he was using $18 per share, and the stock has come down a little bit now. Still a pretty good deal, but of course Volkswagen could still mess this up big time because XPeng stock experienced a significant surge following the announcement of his joint venture with Volkswagen on July 26, 2023. At the time of the announcement, XPeng's stock price was around $15 per share, but following the news, the stock soared 26%, reflecting investor optimism about the strategic partnership. And as of today, XPeng stock is approximately $8 per share. As I'm recording, Rivian is trading at $14.5 billion in market value, and XPeng is only at 7.5, so half. But unlike Rivian, XPeng is already meaningfully gross margin positive at 13%. XPeng's 2023 cash burn was $192 million versus Rivian's almost $6 billion. XPeng and Rivian have similar cash levels. XPeng sells 150,000 vehicles annually and hence has almost 3 times Rivian's vehicle volume. XPeng's most recent operating margin is negative 25%, while Rivian's is negative 123%. By all metrics, XPeng looks much better than Rivian, but Rivian is valued at about 3 times XPeng. And XPeng stock is down 61% since the Volkswagen investment, despite significantly improving operational performance. At time of Volkswagen's investment, XPeng's most recent operating margin was negative 61% and reduced all the way to negative 25%, but the stock still collapsed from the Volkswagen high. And I think the investors are realizing this, and that's why the stock from the high today is down already 10%. Also, looking at this, it seems like there's a good chance that the joint venture is not even going to happen. Volkswagen says they have not yet made a final decision on whether to form the joint venture. Making the deal will depend on the final results of the further review of the technical feasibility of the integration of Rivian's electrical and electronic architecture in Volkswagen vehicles, then further negotiations between the parties, and number 3, regulatory approvals. So Volkswagen can back out easily from this. Gary doesn't get the angle in the press release that the new JV seeks to create next-generation electrical architecture and best-in-class software technology, since Rivian software is widely viewed as inferior to Tesla's. With Rivian now able to fund its R3 mass platform, which will have an average selling price of $30,000 to $35,000 supposedly, it increases the pressure on Tesla to move forward with its own cheaper vehicle, thinks Gary. It will be interesting how this turns out. Volkswagen, by the way, invested $6 billion in software and hired 6,000 specialists only to have something that doesn't really work. There's a Tesla stock debate between Gary and Farzad. Those thinking Tesla can just offer a supervised with driver ride-hailing service to compete with Uber and Lyft until unsupervised ride-hailing becomes available are daydreaming. I get why. It's good for Tesla to set up a Tesla network and start collecting data and gain network effects. But if not cheaper, what's the consumer proposition? I think this is not wrong. It would make sense for Tesla to eat the costs up front, offer the service at 20 to 50% less than Uber until unsupervised is here. The data they would get from these rides using cars they have already sold and revenue they are already making on FSD is worth multiples more than the profit they would make going toe-to-toe with Uber and Lyft. How does Tesla make money if they make the rides 20 to 50% cheaper and pay a driver? It was already pointed out that Tesla wouldn't need to make money from that until FSD is solved, so that's how they could do it. Gary believes unsupervised rides are still at best a few years away. If Tesla were further along, Tesla would apply for regulatory approval for their cars to go driverless. We don't see that yet. To get regulatory approval, Gary thinks it will take 18 to 24 months, but I think there are some markets where approval would be much faster, and that way Tesla can just focus on a few key markets and saturate these markets first before going to other places. There's this rumor floating around that Tesla is considering stopping production of 4680 batteries at its Giga Texas plant due to unsatisfactory energy density and charging performance and higher costs. If cost reductions don't materialize by the end of the year, Tesla will abandon 4680 battery production and switch to sourcing from external suppliers. I believe that post is based on this article. I read the whole thing, and basically what it says is there are so many battery makers that are now going to be making 4680 batteries that if Tesla doesn't have really good batteries that it can make itself, it doesn't make sense to just keep producing batteries by itself. There's a bit more to it, but that's basically the gist. One of the main things referenced in the article was that there's an industry insider who estimates that Tesla's yield rate is only 20%, so out of every 10 batteries made, only 2 are good. Now, on the flip side, if that yield rate is true, that would mean if Tesla somehow fixes the yield issue completely, in the best case, it could 5x the 4680 production rate immediately. There's some new research published by the Bank of America. Tesla's input cost per vehicle, the amount the company spends on components like metal, glass, battery packs, wheels, and tires, averages under $30,000 per vehicle, a new analysis from Bank of America found. This is $17,000 cheaper than non-Tesla EV component costs and about $10,000 cheaper than the industry average, including Tesla. So even as Tesla's margins shrink and sales slow, the lower input costs keep Musk ahead of his legacy competition. Companies like Ford and GM are relying heavily on their gas-powered profits to fund their electric features. Neither company has turned a profit on its EVs. Ford just now recalled 550,000 F-150s due to an issue that could unintentionally downshift the vehicle into first gear, which could lead to a loss of vehicle control and crash. Tesla also recalled 11,000 Cybertrucks, as you remember, for an issue where the windshield wiper motor and some trim in the truck bed. So not really major issues compared to this. From these recalls, we are able to find out exactly how many Cybertrucks have been delivered. And on April 17th, 3,878 Cybertrucks have been delivered. On June 19th, there were 11,688 Cybertrucks. So almost 8,000 Cybertrucks were delivered in 9 weeks. We're getting close to 1,000 Cybertrucks per week, or about 11,000 a quarter, or enough to outsell F-150 Lightning sales last quarter. Oh, but recalls list total vehicles impacted, not sold. So those are closer to production, not delivery numbers. But we know that every single Cybertruck that's produced immediately has a buyer. And here are two beautiful SpaceX Falcon Heavy side boosters landing a few minutes ago. People think that the guy who figured this out cannot figure out full self-driving. They are in for a big surprise. By the way, have you seen the new robotaxi from this company? Supposedly they're light years ahead of Tesla. All they need to do now is just figure out how to make this vehicle be able to, have it drive itself everywhere. That's the only thing that they need to figure out now. It's supposed to begin operation in 2026. It's a 2-seater. They are planning to launch in 11 cities in the European Union, the UK, and the Middle East. General Motors Cruise robotaxi unit has hired Mark Whitten, formerly of Amazon and Microsoft's Xbox video game platform, to be its new CEO. Interesting choice. A lot of people are missing that Volkswagen has not made a final decision on a joint venture. Yeah, they will do it only if it is technically feasible. And Ford and Mercedes both did deals with Rivian and they both decided it wasn't feasible. AJ says, I predict that Rivian will have lost most of the gains from Volkswagen announcement by August 9th, so in the next 44 days. Jeff predicts that $1 billion from Volkswagen for Rivian is just 2 months of additional runway. Gary disagrees. At year end, when Rivian gross margin turns positive, if it does turn positive, annual cash burn will be $2.4 billion, so $200 million a month. And Gary thinks that the investment from Volkswagen will be $3 billion, not $1 billion. They burned $1.5 billion in Q1. What is that per month? You're looking backwards, not forward, though, says Gary. But that was the most recent quarter, although I do understand what Gary's saying here. Gary tries to explain why Tesla stock is up today with the Volkswagen and Rivian deal, forming a joint venture to spend billions on software and presumably autonomy. Pressure builds for the other players to keep pace, which increases the odds of one or more licensing deals with Tesla for their market-leading FSD software. And this definitely sounds right. There is a growing acceptance that legacy automakers will have to partner with others to build next-generation vehicles, and nowhere is that more true than with FSD. And this looks good for Tesla, not so much for Rivian. AJ says, I have to say, I find it extremely impressive how RJ manages to coax repeatedly business people into investing billions in his extremely high loss-making company. What you see in the chart are the accumulated earnings/losses of Tesla and Rivian. And you can see how Tesla, even after the increase from inflation adjustments, barely ever touched peak accumulated losses of $8 billion, while Rivian already amassed $20 billion. And by my estimate, says AJ, the ride from Rivian's guidance will highly likely cross the $30 billion loss threshold. And this is quite a take. If the JV creation between Rivian and Volkswagen fails and Volkswagen walks away, we'll see a collapse in Rivian's share price, since number one, it would be clear that Volkswagen would sell down their stake of around 6 to 8%. Traders would front run. And number two, Rivian would have to look for new capital providers. This search would become harder with a fresh failed partnership attempt. And he thinks that oddly, Volkswagen's investment increased risks to Rivian. Even if there is a positive JV announcement in the coming months, the JV can be discontinued at any time. This creates an additional failure point for Rivian investors. In the media, you hear a lot about a Tesla recall. So Sawyer is sort of retaliating, and he's making a list of automakers ranked by total US recalls in 2024, distinguishing between physical recalls that require a service center visit and at home over-the-air software updates. So you can see that Ford had 30 recalls, 3.6 million vehicles affected, 0 OTA updates, and then same with Stellantis, roughly 0 OTA updates, 2.29 million vehicles affected. Kia, 0 OTA updates. Mercedes, 0 OTA updates. When I had a Mercedes, I had one OTA update which failed, and then I had to go to the dealership just to get it installed. That was a nightmare. BMW, same thing, 0 OTA updates, 0 OTA updates for the Jaguar, Land Rover brand. GM, similar. Toyota, also Volkswagen, 0 OTA updates. Tesla, there were 4 physical recalls, 26,000 vehicles were affected, and then there were 4 OTA updates, 2.5 million vehicles were affected. And then there's Rivian, but Rivian hasn't really made many cars. And good luck fixing this with an over-the-air update. Porsche to recall over 31,000 Taycan electric cars due to a brake malfunction, and you have to go to the dealership to get this fixed. And here's a BYD owner who is furious at his vehicle's software glitch. On a hot summer day, his seat stays heated even though it's turned off. Seat ventilation feature doesn't help either. The owner called it industrial garbage. Poor guy. Look at this. So the heating is turned off. I think that's so the heating came back on even though he turned on cooling. Okay, heating is on. He turned it off, and it just came back on. Oh, that's torture on a hot summer day. That's torture. I think maybe BYD has realized, oh, you know what? We want our customers to be healthier, and we heard about all these benefits about sauna, so let's get you the sauna experience in our vehicles. Rivian stock continues sliding down later today. It's still up 21% almost just today alone, and I think one reason why it jumped so much today is because there were some people that were shorting Rivian stock, and yeah, a lot of these shorts got severely burned today. So just that alone pushed the stock higher. It's still up a lot though. That's it for this video. Thank you so much to my Patreon supporters, and I will see you in the next one.